Hey, good morning, fellas. I forgot to do the drip stock review yesterday. I'm going to do it this morning. We did okay. We did far better than many other people. So let me show you what we're looking at here. We had windstorms all last night. There's the sun right there, which I'm hiding from. I think I learned how to hold my cell phone so I don't mask the microphone. Got to do a little bit of work with the pool. Watch the preseason football games and do my fireman carry. That's unbalanced. That's balanced. The only problem is that's 45 pounds by itself, and each one of those is 90 pounds because it's 45 pounds on each end. So that's a little bit heavier for me to do. So, anyways, take it. We I'll attach a video. It's called the All In Podcast. I think it's four billionaires on there talking, and they talk about exactly why we all lost a crap load of money. Not a crap load of money. We only lost like $1,300 on Monday, and we got it back plus. I'll show you what we got. So last week we were at $30,122.70, which was a minus of $127.09. And at the close of business last night, we made, and then on Monday we lost another $1,300, and we ended up finishing today at $30,319.86, or up $197.16. And for the year, we are up $5,976.64, and that's all out of my laptop. I still believe in using pen and paper. Okay, so let's show you what we got here. And for those of you who might be new to this, one of the things I can help you with is how to manage your money and putting your money to work for yourself in reasonably safe investments. They're called dividend reinvestment stocks, where you buy a fraction or whole share of a stock and you make yourself a shareholder of record. Once you do that, you can buy stocks directly from the company. So what we use is a proxy. The name of the company is ComputerShare. We've always used a free account. And what we'll do, we have 13 stocks in our portfolio, and I go through them every 7 days. So I can't hide from good news or bad news. Now, I would love to hide from bad news, but I don't mind hiding from the good news either. No, I think I screwed that up anyways. I just can't hide because we do it on a weekly basis. We're either up or down. So anyways, our goal for this year was $30,000 and 30,500, and we started off this year at, where the hell did that go? Our goal initially was 25,500, and then we raised it another $5,000. So let me just show you. Talk too much. The only book I recommend is The Richest Man in Babylon if you're getting started. And there's too many other books, Random Walk on Wall Street and all the rest of that stuff. I think you'll enjoy the podcast if you have the time. It's called the All In Podcast. But they specifically addressed why they had the meltdown on Monday. So turn you around, focus you in. There's the company logo up in the left-hand corner called ComputerShare. And then it goes over summary, portfolio, active documents, blah, 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 blah. All the stuff you can figure out on with yourself. We'll come down here. What would you like to do? And here is our portfolio. One of the things I do is we go through our portfolio stock by stock. Doesn't take that long. First one up is AMD Advanced Micro Devices. We have almost a share, 0.63 of a share. $134.27, and it's down, and that is the market value. Next up is Amazon. The three or four letters underneath each one of the stock names is its ticker symbol, which makes it easier to look up on the main exchange, the Dow. All right, we have Amazon. We have 24.918 shares. It's up to $166.94, and there is its market value. Next up is California Water. 46.62 shares, $52.83 down. And if you'll notice, above it, there is a green arrow showing it's up. Red is down, and orange means there was no change or they were not on the market that day. Below that is Chesapeake Utilities Corporation. We have 18 shares. That one was down. Costco Wholesalers is our next one at 1.89. We might make it to 2 shares this year, and it's up to $854.93. ExxonMobil, XOM, 39.27 shares, $118.85. Marathon Petroleum was also up 15.77 shares, $175.83. RTX stands for Raytheon, and that's the same as its ticker symbol. We have 15.54 shares in there at $116.15. The Clorox Company, we have 12 shares. It's down to 143.03, and they're not down by that much. Coca-Cola Company is next, and it's very famous. This is my homage or my throw out to Warren Buffett and Charlie Munger. That's the stock they've always kept, so I do that. But we're doing okay with it. 41 shares, $68 a share, 68 and some change. Right below that, J.M. Smucker Company. We got that as a joke before I owned cats, and it was a joke at the cat ladies and the dog ladies. So that one's up to $118.46. Right below that is Tyson's Food, which is down. And below that is Walmart. About this time last year, we had 15 shares, and then at the beginning of the year, Walmart did a 3-for-1 split. That is one of the advantages to being a stockholder, a shareholder of record. It's $67.95 a share, and it is up. Those are our 13 stocks, and our total portfolio balance, again, this Friday, as of Friday, and that's $30,319.86. I'll show you the graph, and then we'll talk about why we picked the stocks. That is the graph to show that we don't have all of our stocks in one industry or one company. All right, so why do we in the stocks that we invest in? We invest in the stocks that produce a good or service that pretty much, it's not a have to have, because you don't have to have anything except for food, water, and air. But outside of that, we invested in companies that produce something. Amazon, Walmart. The other ones are companies that actually produce a service that is needed. California Water, everybody needs water. Chesapeake Bay Utilities, everybody needs electric power. Exxon and Marathon are both oil and gas companies. They produce a bunch of other things besides that. There's a lot of wars going on, a lot of drones being made. Raytheon makes a lot of drones, so even though that's ghoulish, it's there to be had. Clorox Company makes a lot more than just Clorox bleach. J.M. Smucker Company, and if you're ever in any of those little diners or that the little things of jelly, that's the J.M. Smucker Company. But they make cat toys, dog toys, they make all kinds of different stuff. Tyson's Food is another one, and Walmart, of course, which is our last one, is a grocery chain large provider of goods to the people. None of this is sexy. None of this is you're going to make 4 times the amount of money you would make anything. So for us, $30,000. No, yeah, just over $30,000 is going to probably make us just under $10,000 this year for doing nothing. Part of the reason for me starting this is to help you understand that saving money and putting money to work for yourself is not rocket science. I can tell you I got screwed real bad out of a Charles Schwab account. It took me a long time when I was a young man to save up $5,000. So I made learning about money a priority. In my first book, God damn it, cat. Stop. Cats do not listen. Anyways, cats and cat. Okay, anyways, I lost my train of thought. But anyways, we only invest in companies that are generally needed. Not they're not a want. They're not a luxury. We don't invest in luxury items or alcohol and tobacco or things like that. We just invest in companies that most people think are very unsexy. But as we or considered ourselves long-term investors, we use dollar cost averaging to buy the same amount of we buy stocks at the same time when we use the same amount of money, and we use time and compound interest to overcome spot buying, or buying when it's up or buying when it's down, trying to guess, what's the key to the stock market: buy low, sell high. So anyways, hope I'm not boring you too much. And I believe this is an objective, tangible way to show you how you can make your money at the minimum $20 each month. You can invest in some of these drip stocks. That's not a lot of money. And over time, and compound interest. Plus, if they have stock splits or they acquire a company, there's just a lot of advantages to it. And now this is not my only computer share account. I have a few others. And anyways, let's get to the point. The point is that what are we going to do with this money? This is our part of our 10% of our money that we're going to keep for the rest of our lives. Now, in the meantime, let's say I need to remodel a bathroom. Let's say I need to buy a car. Let's say I need to replace a transmission. Let's say I need a loan for something I want to do with money. I'm going to pledge this as collateral so I get a better loan with a better annual percentage rate, APR. It also improves, anyways, doesn't matter. Why do we not cash out? Because we don't want to realize our gains and have to pay taxes on them. If we just leave them in there, the only thing we get taxed on is the money at the end of the year that we earn, not the initial investment, not the, anyways, doesn't matter. I don't want to get into that. Hopefully you understand. I have a bunch of things to do today. Love you guys. Stay safe and healthy. Take care of each other if you can, and if you can't, you have to take care of yourselves, all right? Like a Ford and a G-string. West Texas, El Paso, I'm out of here. Money matters, and you should know as much about money as you do anything else. And basically, how do I put my money to work for me? One of the adages from Clausen's book, which is The Richest Man in Babylon: your money's not going to get a cold. It's not going to quit on you. I think he uses the word gold instead of money. Gold's not going to quit on you. Now, you can throw it away by using it in other stuff. So, hope this helps. Either way, I'm going to keep doing it so I can prove objectively that this pays off in the long run. Sometimes in the short run, but we took what most people would consider a hell of a loss on Monday, and we clawed it all back. All right, don't forget, there'll be the All-In podcast at the bottom in the description, and they'll explain exactly why it happened, and it was tied to the Japanese yen, okay? Love you guys. Bye-bye.